Hello, I'm David Penn, Research Analyst with Finovate. Thank you for joining us for our latest Finovate webinar. Today's presentation is titled Bridging the Gap, Connecting Banks with Fintech Applications to Accelerate Innovation. Our featured guests for today's discussion are Joe Lichtenberg, he's Product and Industry Marketing Director with InterSystems, and Michael Hom, who is the Head of Financial Services Solutions, also with InterSystems. Today, we're going to examine how seamless connections between cloud-based fintech apps and financial services customers' production apps and data assets will enable fostered innovation. This empowers a wide range of business initiatives, from the ability to offer more personalized services to streamlining operations and improving regulatory compliance. Gentlemen, we've got quite a bit to go over today, so I figured let's go ahead and get started. We'll jump right into it with a question for you, Joe, if you don't mind.
Sure, thank you, David.
So I understand that You bet. So I understand that InterSystems conducted some research recently to find out about some of the challenges that global fintechs are facing when it comes to working with data and established financial institutions. I wonder if you could talk about that a little bit to start us off.
Absolutely. Thank you. And thank you for having us, David. I do want to talk about the interesting data that we have from the survey that we just did. And the reason that we did that, we all know that the adoption of fintech services is growing, both by established financial services organizations as well as by consumers. What people may not know is that today there are more than 26,000 fintechs worldwide. And that number tripled in just the past 2 years. And today, there's over $120 billion in total funding for fintechs, and more than 150 fintechs worldwide now have a valuation of $1 billion or greater. And here at InterSystems, we've seen this growth as well, right? Over the past few years, working with both fintechs, as well as with the banks that are partnering with the fintechs. And by and large, these banks that need to integrate their offerings from the fintechs with their infrastructure. So what we wanted to do is really sort of augment what we're seeing from our purview and really understand what the key drivers and the challenges are for this space. So our company, InterSystems, we're a data and analytics technology organization. We created and executed the survey where we surveyed over 500 senior decision makers from fintechs globally. So we reached out to fintechs in 12 different countries around the world, including North America and South America, the UK and Ireland, and Asia, Singapore, Australia, really to understand their current technical challenges, their priorities, initiatives for the coming year, and also, interestingly, their perceptions on collaborating and or competing with more traditional financial services organizations. And one of the really overwhelming data points that came out from the survey is that 81% of fintechs reported that data issues are the biggest technical challenge.
81% is a huge number. Can you maybe unpack that a little bit for us?
Yeah, absolutely. So obviously in that survey, we really drilled into what rolled up into that 81%. And there were a number of issues. Number one was around advanced analytics. So 41% said they struggled to use data for advanced analytics. 40% said they're unable to connect with their clients' or customers' infrastructure to get to production. 40% talked about having security issues, and 39% have challenges with cloud and multi-cloud issues.
Mm-hmm. You pointed out that over 40% struggle to use data for analytics. Why do you think that's such a problem?
Yeah, that's right. So in the survey, 41% said that they struggle to leverage data for analytics, including machine learning and AI. And also in the survey, 45% said that they plan to do something about it. They plan to implement AI and machine learning functionality in the next 12 months. So it's a really good question. What we see here at InterSystems is that the majority of fintechs that we work with, they do want to use analytics to differentiate. They really need to do that. There's so many areas where this can be critical. and innovative use of advanced analytics can really enable fintechs to differentiate from the status quo. And so, whether that's for creating really outstanding client experiences via hyper-personalization and next best action, or for things like advanced portfolio optimization, there's all sorts of vectors. And, a really good example is a company like Robinhood, right, that is clearly making an impact in the space, and they differentiate from the established investment banks and trading platforms based both on hyper-personalization and based on portfolio optimization. But, what we see is across the space, there are really so many vectors where using advanced analytics can allow fintechs to differentiate from the status quo in the marketplace and really gain adoption and make their mark.
Mike, I wonder if you could weigh in on some of those opportunities that are available to companies.
Yeah, what I'll start with is, whether it's a financial institution or a fintech, I think the challenge really boils down to how they handle the volume and variety and velocity of the data, right? Like, we talk about that a lot, but to really create meaningful, predictive, and prescriptive insights, you really need a large amount of data, of good, clean, and relevant data, right? So that's one part of that challenge. But then the second part is, once you have those models, and to power those models, you need to handle the velocity of the data that comes in during real time, right? So that in itself kind of really highlights what the survey is saying, right? Data is so important these days, right? Everyone wants to be data driven, right? So the advice that we provide many of our customers on how they can accelerate their efforts here is really to start with a focus on a scalable and extensible data foundation, right? Like, if data is that important, that has to be the first step, right? You want to make sure that you're not just moving and creating copies of the data, but more of focusing on how do you connect to that data, right? Along with establishing very strong data controls and governance pipelines, right? Because the adage, garbage in, garbage out. So you really need to focus on that, right? And then additionally, we advocate that you have an open, democratized access approach, right? Allowing for a diverse usage across your organization, right? Like, if you focus it down to just a certain set of individuals and components, that really starts to hurt you. There are very capable individuals within the organization these days, right? A lot more tech savvy. A lot of people know how to use the data themselves now, like whether it's through directly through SQL or through a data visualization tool or a reporting tool. Even the vast amounts of like new data science frameworks that are out there. And lastly, and bringing it all together is the fintech services that are out there in the wild. Right? You want to take your data and be able to pair it up with these services, whether it's through APIs or whatnot, but make sure that you can kind of really get that advantage there. Joe touched upon the importance and the differentiation that can be had, once you get this through. So just imagine how valuable it would be if you could predict or even prevent customer churn, right? So that's one of the things that we worked on with a customer, where you just want to know, competition is really heavy these days for customers, and you want to make sure that you can keep the customers that you have. Continuing on the theme of customer centricity, what if you could provide loan information, or let's just say rates when someone's looking for a house, or if they're going through a tough time, right? So that's really kind of making sure that you put the customer first and really think about what their needs are. And then if you take it on the other end of the spectrum to more sales and trading, what if you were able to have a live, updated, holistic view of your businesses and the associated risk exposures, right? helping you navigate or apply like macro hedging capabilities during like, the Ukraine crisis that we have right now, right? Whether it's the financial crisis of 2008, or Brexit, or let's just say the Trump election, right? So, having that capability to have a very updated view about where you are and where your company is, I think is very important these days. As we know about the velocity of our markets these days, I think that starts to be very critical in a differentiation, right? Look, there's many more. I mean, it really provides a company a wide set of insights and ability kind of as you move forward, if you really think strategically.
Those are fantastic examples. Often it's in times of calm, we think we've kind of got a handle on everything, but as soon as any bit of pressure puts on the system, all of a sudden we're looking for all of the different parts. Where's everything and how's it interacting? And those are, I think, some excellent examples of the kind of things that can happen for a company and when they're really going to want some visibility and understanding into what's going on in their systems. I'm curious about something else, Joe. I know that there's been quite a bit of talk about cloud in recent years, and I'm curious what the survey results found out in terms of either challenges or opportunities that companies are finding in terms of interacting with the cloud.
Yeah, cloud also rose to the top in terms of responses from the survey. And we see that as well, right? Companies, and by the way, it's not just fintechs, all organizations are sort of struggling with what's their cloud strategy. And, are they going to have a multi-cloud strategy? Do they need a hybrid approach? So in the survey, that was one of the top responses. 39% reported that they're having issues with cloud and multi-cloud support. And so, clients, for fintechs, they may want to see some of the service running in the cloud. Some of it may be running on-prem, either for security or performance requirements. And that's a challenge, right? And also from the survey, 23% offer a hybrid solution of cloud and on-prem, but that's a pretty low number, right? Only 23% do that. And we have a lot of customers that come to us with help with running in a multi-cloud environment for a variety of reasons, right? And running in one cloud seamlessly, is challenging enough, right? Because you have to be able to work well in that infrastructure. Running seamlessly in multiple clouds or in a hybrid environment where it's cloud and on-prem can be sort of proportionally more challenging because you need to make sure you're providing the same functionality regardless of the deployment environment. The other thing that we saw in the survey was that over half, 51%, said that they were planning to invest in cloud technologies over the next 12 months or so. So it's absolutely at near or at the top of the list, and obviously cloud is pervasive in general, but especially with fintechs.
Absolutely. That 51% number is certainly constructive, but the 23% number is very, very sobering, as well as some of the points that you made about the struggles of interacting with a single cloud, or a hybrid structure. What are some of the things that companies can do to either overcome these challenges as they arise, or preferentially avoid them in the first place?
Yeah, it's a really good question. I'll tell you what we see from our purview. One solution, and this is what our customers are doing with our technology, is they can build out their service using a deployment agnostic technology platform, right? That supports any combination of on-prem and all of the public clouds and private cloud deployments, all with the same API, right? And so by doing that, so you have to make those architectural decisions up front, right? But it makes it much easier to be able to support multiple deployment environments with a single code base, right? You still need to work within the different environments, but your code base doesn't change, right? It's a single API, right? And so, it makes it much faster and simpler to deploy, in one cloud environment, but, also in multiple environments. But it also provides the flexibility, right? I mean, if you need to switch from one environment to another based on, maybe it's a customer mandate from your customers, or maybe you're running in one public cloud environment and a competitive environment comes to you with a sweeter deal and you want to be able to move it, do you have the flexibility to be able to do that? So, rather than brute forcing it and being an expert in every environment, taking advantage of as I said, a deployment agnostic platform to build on can really solve a lot of those problems and get you to those sort of hybrid and multiple cloud deployments much faster with less effort and less maintenance.
Mm-hmm. Mike, I want to turn to you to talk a little bit about some of these issues with regard to connectivity. But first, I did want to follow up on some of the points that Joe was making in terms of some of the cloud-based challenges that our companies are facing. What are some of the things that you've seen and would sort of point out in terms of ways that companies can sort of avoid, again, some of these issues?
Yeah, I mean, we talked to many of our customers about the merit of being cloud agnostic, right? And also having cloud portability, like whether now is the time or into the future, right? Because, we talked a lot about the revenue generating capabilities, but the other end of the spectrum is the risk mitigation, right? So you think about infrastructure risk mitigation in particular, critical systems are designed to prevent downtime. You want to minimize risk, right? That's core to what you do. And in the past, it's around like a single disk failure or a server failure or maybe a network failure or a data center failure, right? But now that we're all extending into the cloud, that now needs to be taken into account, right? Like how do you handle that? Like regulators are actually talking about that. Like there's regulation that's going on in the UK around how do you protect yourself? Just think about the criticality to a particular company, but then additionally, think of certain companies that provide these very broad end services that everyone uses. So now we talk about systemic risk to the broader market, right? And so, the discussion around being able to support multi-cloud, running in multiple clouds simultaneously, or even being able to port across one to another for other reasons, whether that's cost or something else, right? So you really kind of it's starting to come forward, right? So we are looking into the future a little bit, but as I mentioned, like the regulators are thinking about that now, right? And Joe mentioned around hybrid deployments. There's a kind of a low adoption factor there, but I think that it comes into play, right? We want to go into the cloud, but now we're going to probably have to rethink things where you want to keep some things on-prem from a security standpoint, but still utilize the many advantages of clouds. And so you're going to have to kind of think about that all together, right? I think it's not an easy problem to solve, to be very honest. But I think as people are going through their strategic modernization efforts, like they have to keep that. I think we promote having an emphasis on optionality, right? Being able to adapt to different situations and being able to, as Joe mentioned, what if you want to just move to another place? Right, and being an agnostic of where your systems run.
Mm-hmm. Interesting points and important points as well. I want to throw out another question. This one maybe might be one that both of you can comment on as well, looking at some of the survey results. And one of the ones that stuck out to me in particular was the idea that 40%, almost half of the fintechs who responded, were struggling to connect with their clients or their customers' infrastructure. And at the same time, we do know there's a consensus among fintechs to improve their services internally and also to collaborate with sort of more traditional financial institutions. So I'm curious, what are causing some of these connectivity challenges for fintechs? Why are they facing these difficulties when it comes to accessing, connecting, using data, especially when it comes to connecting with their customers' systems? And either one of you wants to begin with that would be fantastic.
Yeah, absolutely. I mean, this is one of the biggest use case patterns that we see in working actually both with fintechs and with their customers. So for B2B applications where they need to integrate their services with their banking client, right? And it's a really common use case, right? So different from a B2C fintech application where it's just, it's running and, you're doing payment processing or whatever for B2C. A lot of these, whether it's around, wealth management or customer onboarding or CRM or things like that, there's this need for the fintech to be able to integrate tightly with their banking clients' backend systems, whether they're data sources or production applications or things like that. They need a bi-directional data gateway, and it's a very common pattern, right? And it's critical for the fintech to be able to streamline that and get into production quickly to be able to onboard a new customer and generate revenue and get them successful and so forth. And also for from the standpoint of their client, the established financial services organization, whether it's an investment bank or a asset management firm or wealth management firm, being able to be as agile as possible and be able to, they're looking at, do we partner with a fintech or do we implement on our own? And very often they're looking to partner with a fintech because they've got best of breed. And, it's the opportunity cost of having to build it themselves, and they can be much more agile. Right. And so around agility, right, how do they get to value? How do they get to production much more quickly? And so this was a really big issue. I mean, it impacts revenue, it impacts getting to production. This was actually the second most commonly reported challenge behind advanced analytics. And there was another survey that we didn't do, but it came from a company called Cornerstone Advisors, and they interviewed banks, right, to say, what are your biggest challenges when partnering with fintechs? And the top 3 challenges, according to banks, were integration with the core system, integration with ancillary systems, and integration with digital banking. So they're all around integration. And so for us, this really sort of hits close to home, right? I mean, there are lots of different approaches to integration. I've been in the space for more than 25 years. I worked with, web services, frameworks, and I worked with enterprise service buses, and there's point-to-point integrations, right? And so a lot of these sort of implementation patterns are still being used, point-to-point integrations that tend to be brittle and difficult to maintain and so on. But it's actually very exciting. So what's going on today, and this is the pattern that most of our customers are using with our technology, there's this fundamentally new approach. It's called a data fabric or an enterprise data fabric. All the analysts are calling it the future of data management. Every enterprise architect that I work with in financial services is aware of it or not only educating, but starting to implement this pattern in a variety of, sort of use cases around their organization. And it's fundamentally different than all of these other sort of connectivity approaches. It's a real-time, bi-directional data gateway. And it not only connects the fintech applications with the bank's infrastructure in a highly secure manner, but a fundamental difference is that it's accessing the data on demand from the bank's infrastructure as it's requested by the application, as it's requested by the client. And so it creates this sort of real-time bi-directional flow of data. And within this fabric, the steps that need to be taken from those various source systems. So for connecting and integrating and transforming the data and applying, different types of sort of data processing steps and data pipelining, and even analytics in this real-time dynamic fabric is all happening on demand. So it's a far more effective approach than all of these prior approaches, and it's allowing fintechs to get to production much, much faster so that they can onboard their customers. It's allowing the banks to get to production much, much faster with a simpler and more flexible sort of approach. And it's a win-win for both. Some of the survey data that reinforces that, we learned that 91% of fintechs are planning to invest in new technology over the next 12 months. 48% say they're investing in data management. 47% are investing in better integration to solve exactly this problem. And interestingly, 42% said that they're planning on investing in data fabric technology, right? Specifically as
Right.
part of that. So it's a relatively new architectural pattern, but it's gaining traction very, very quickly.
Interesting. Michael, I wonder if you could elaborate on some of the benefits of this technology. Definitely heartened by the idea that that over 40% folks are specifically looking at data fabric as a solution. Maybe you could elaborate on some of the benefits should they pursue this.
Sure. Look, there's a few factors here, right? So if you think about it, a lot of folks are obviously pushing toward an open architecture. Right? That allows for kind of, again, democratizing the data itself, giving quick and easy methods to seamlessly connect to all that rich and valuable data that you have there. Right? I think that's a theme. That's what people are driving toward, and that helps them into the future, right? Like how you connect to these innovative fintech services. Like if you have a very closed architecture, it's every single time it becomes hard, right? And it's not very scalable in that capacity. I mean, it's the second part of advantage there is consistency. And so a lot of times, I guess in the olden days where you would create copies and those copies start to drift, like the data itself is not necessarily the same. So you really start to, first off, copies are bad, right? Like, they could be unverified, they could be modified, and you really start to have many issues around that, right? Having common methods to be able to access the same data that everyone else is using is the direction. I think that benefits the institutions along with the fintechs that they're working on, right? So those two factors, is very critical. But then an additional one that probably benefits more the institutions is control. I think no one's going to argue that security is important. Making sure that you can monitor what's going on, control the access points, controlling the resources, right? Like say one service that you're using is dominating the resources that are available. So you want to be able to kind of have that fine-grained ability to shut them down, maybe put limits on them. I think those are all very important. Be able to permission who can see the data and what data. I think that's really kind of the I want to keep it short, but the three main benefits there, really start setting you up for the future where having that access and being able to use it in an efficient way, right? I think about like the next time you have another fintech service, it doesn't take months and weeks to get to try it and maybe buy it. You're actually able to kind of set that up in a few minutes or hours, right? I think that the huge benefit is that, right? You're going to start getting that time to value there.
Right. I wanted to draw you out just a little bit more because I think you've really hit on a couple of things that are really interesting about this technology as it's deployed. And I'm thinking about what all this is going to mean for their architecture, what fintechs are actually going to be able to achieve once that bidirectional gateway between the FI's apps and data assets on the one side and their apps has been established. What are the sorts of things that are possible for fintechs once that takes place?
Is that to me?
Yes, I'm sorry. Yes.
Yeah, sorry. So I mentioned time to value, right? That definitely is going to be advantageous to the institution and the fintechs, right? Fintechs, they want to, increase their customer base. So being able to go to each one super fast is great. Likewise, they get agility. They're able to kind of tailor things much quicker now because the data's there, access points are all kind of available, and again, coming back to efficiencies, they can run their system pretty easily now, right? It's very common interfaces. They can connect much easier than in the past. and be able to scale accordingly, right? So think about when we talk about data, I don't necessarily talk about batches of data, but we also think about streaming data. So you think about those real-time use cases, you can now have that's gonna all be available. If you design that correctly, right, you get access throughout. And I think those are gonna be advantageous, obviously, to fintechs and obviously to institutions themselves too.
Excellent. Joe, I had one question for you, mentioning the smart data fabric. Again, very impressive number with the 40% who are keyed on to that as a solution. But I'm thinking about those who are still getting to understand the role that smart data fabric can play. You said it was cited as one of the future tech investments by fintechs in the survey. Could you talk a little bit about how it's different as an architecture from what a lot of fintechs may already have in place?
Yeah. And so the first thing that I would say is it's non-disruptive, right? So it's an architectural pattern that connects sources with consumers. So in this case, we're talking about the consumers being the fintech applications and the sources being, the variety of sources that are already implemented and running in production and existing within their banking clients' applications. So, rather than copying data rather than moving data, sort of the batch nature and the delays associated with that, and the complexities associated with either point-to-point connections or different ways, hub and spoke architectures and so forth. It's a fundamentally different approach where, again, data is accessed on demand. And so, for the use cases where very low latency is critical in both directions, right? So you want essentially your fintech service that you're implementing as a bank to really be acting as an integral part of your infrastructure, right? It's a much better approach, and you can just think of it as a seamless, real-time, bi-directional, easily extensible fabric or data layer that, again, I mean, it's fundamentally different from copying data or making point-to-point connections or some sort of a hub and spoke architecture. And, again, I think every technology analyst is touting this as the future of data management, fundamentally different, the right approach, in the key analysts. In fact, we're going to a major technology analysts event in a couple of weeks, and there's close to a dozen different sessions on the data fabric as an architectural approach that organizations should be considering. And there's lots of different use cases for it, right? So we see it as an internal enabling data layer to be able to share data internally, to be able to provide line of business users with access to current information. But this sort of gateway, this bidirectional gateway to connect the fintech services is one of the top use cases that we're seeing in our experience in financial services, especially working with fintech organizations.
Mm-hmm. I also want to talk a little bit about, again, extending some of the benefits of things that financials and fintechs are going to be able to take advantage when they're engaged with this technology. And Mike, you mentioned a number of things that I thought were really important. You mentioned increased speed to value, increased operational efficiencies, supporting real-time scenarios, that sort of thing. I'm curious, in addition to faster access to data, better efficiency, a lot of fintechs want to be able to use the benefits of AI and machine learning as well. And I'm curious what a bidirectional gateway can do to help when companies are looking to leverage some of these analytical and predictive applications.
Yeah, so when it comes to analytics and AI and ML, again, it comes back to data, right? And you want to be able to have access to this wide set of data to determine what is relevant. And so, in addition to that gateway, we also advocate for something we call data workspaces or data science workbench, right? Where, whether you're a data scientist or you're a quant or you're an analyst, you want to be able to explore what data sets are out there and you want to be able to understand what the fields are, what their meaning is, and so forth, and then seamlessly also requesting permission to get that data, right? So again, always keeping in mind security. And then once you have a determination as to what you think you need, you want to be able to get that data in a usable way. And so, we most of the time try to provide a dedicated environment that we spin up and that we can spin down very quickly with all the data that you need. So you can just work in your little sandbox and be happy and generate some very great insights or produce a model, right? And then allow you to refresh that data, because data, depending on how long that analysis would be, you want to be able to keep that data refreshed and, making sure that, you can revalidate your assumptions and your model, right? So, and you also have to think with all AI, ML, and analytics, it's an iterative approach. So you have to kind of go through that again and again. Maybe you want additional data points. You want to make that whole experience easy. If you truly believe analytics and you're going to be data driven and like AI and ML is going to be your future, you have to really focus on it, making that as easy as possible. And so we do that. We have a pattern that we provide. It really, as you mentioned, I think you said 45% are looking to implement this, but I think also survey says like 41% said that it is hard, and it is, right? Because of that, right? Getting access to the data is one part, but then being able to use that data in an easy way is another, right? So yeah, I think that's very critical.
Yeah, I mean, to Mike's point, if you think about, we're talking about a data fabric, and it's this dynamic data layer, right? And one of the patterns is what Mike talked about, right? So you have all this data coming in real time, and you have the ability to build and tune advanced analytics, predictive algorithms, prescriptive machine learning algorithms, right, with this workbench, right? But then in addition, right, so you now have these models in production and data is coming in, right? One of the big sort of drivers is, what some people call continuous intelligence. And right, so, so the environment changes over time, right? A simple example is if it's a fraud detection algorithm and you're blocking certain fraud patterns, others are going to arise. And so if there's a delay in terms of taking the data and moving it, copying it someplace else, and then, coming up with new algorithms or tuning the algorithms and then getting them back into production, right? That's downtime where you're not being as effective as possible. And so that's what continuous intelligence is really all about and tries to get to, is that it's sort of an ongoing, a virtuous cycle of, if there's drift in the environment, the models can be tuned and so forth without a lot of heavy legwork. And so, for all financial services organizations, but especially for fintechs that are running in production, if they are adopting this architectural pattern, right, that's another set of benefits that they can glean from this, and especially in light of the survey data, where obviously there is such an emphasis on advanced analytics and predictive analytics, prescriptive analytics, right? Not just what's likely to happen, but what are the actions that either you can take or programmatically take in response to these actions that happen. All of that can sort of be embedded into this data fabric, with the right technology and the right platforms.
Really exciting direction that fintechs are going in, and it's fascinating to find out some of the different ways the technology is supporting that. We have a handful of questions that have come in that I'd like to go ahead and share with you as well. But before I do, I wondered if we could just briefly talk about, and Mike, you sort of hinted at this a moment ago, about some of the ways that InterSystems can actually help these companies accomplish some of these things and address some of these challenges. And I'm wondering if maybe both of you could briefly respond to that. And Michael, we could start with you. Again, looking at some of the ways that InterSystems can and has been able to help fintechs accomplish some of these things.
Yeah, I mean, we have many customers in that vein, right? Because that is our specialty. But there's one that's a very big financial technology company, right? So they offer out many different systems and services to the financial institution, to the whole market, right? So, we're the backbone that powers their critical system as a data fabric, right? So we help connect the customer data along with the reference and market data that they have, and make that fully available to all the different services and functions that they have. And so they're integrating their back-end systems, their front-end systems, and it's now all integrated within one. And again, that's part of their modernization exercise, where their systems now are cloud-oriented and they are now discrete services, but they work as one, right? And I think that's a real good example of how systems should be in the future, and we're partnering, working with them to make that happen for their customer base.
I can give you a couple of other customer examples. One of our customers is a big investment bank, and we're working with them internally, separately from working with fintechs, to help them with their data fabric architecture to connect up. They have hundreds, if not more, of different systems and sources for a variety of different use cases, for business user self-service, for decision support, what we call Business 360, and others. But as a recent use case is they wanted to onboard a fintech service, right? It was very similar to what they're doing with their internal systems, and they want to make that as part of the data fabric, as part of the sort of the data layer, the connectivity layer. So we help them do that. So in that case, the client was an investment bank. But we also do a lot with different fintechs, actually, and partnering with fintechs as they go to market and they implement, and we're sort of their implementation technology, because they don't really want to have to worry about that, right? And so as they're working, either in a POC, a proof of concept or proof of value, or doing the implementation work, right? They're focused on their core tech and less so on implementation. And so we make that whole, sort of bucket of work around integrating with their client. So we take that on and we handle that. And so, it's more of a co-selling, co-implementation motion, where we help them as they sell into their client base. So you got sort of three different scenarios there that are all, they're different, but they're all sort of similar. They're all similar in terms of the underlying work and the underlying architecture.
Excellent. We've got about 5 minutes left, so let's go ahead and take a quick peek at some of these questions. They're fairly basic, which I think is actually a very good thing, because I think they'll capture some of the general questions that folks might have. The first one, how does this fit with my current technology stack? And the person makes the example of already having a data lake, for example. Yeah. So in terms of that, how would that work?
Yeah, Mike, if you don't mind, I can start with that. So this is, absolutely common. This is one of the first questions that we always get is I have data warehouse and I have data lakes and I already have, lots of technology, are you going to come in and replace that? And the answer is always no, right? So all of those existing implementations, and a data lake, I'm glad they asked, is a really good example. Those all become sources into the data fabric, right? So there's no rip and replace. We're not replacing existing technology. And, it's very much what we see, an incremental implementation pattern, where we look to see what are the use cases that are going to provide the most value, right? And then what are the source systems that we need to access data from, and then start and then grow from there. And very often, we see like a data lake, is already the data repository for a lot of this data, right? And so, the option is we can either touch the data lake or we can go back to those source systems again. Sometimes it makes sense to touch the source systems directly, but if there's not, latency concerns and things like that, sometimes we touch the data in the data lake. And in so doing, applying sort of a consistency, harmonizing the data, a common semantic layer, being able to apply lots of analytics now to data that within the data lake was, difficult to do. Having that data and analytics layer be populated in part from the data that exists in the data lake. So it's non-disruptive, and ultimately they're just sources into the data fabric.
Excellent, very, very helpful and very good to hear. Another question, again, I think very common question, I suspect that you've also come across, is what is the general time frame from implementation to getting real-time access? I guess the are we there yet type of question. How long does it take to get all of this up and running? And whoever would like to answer that one.
I can take that. It obviously depends on how complex your installation is, right? And where you are
Sure.
on your journey. Like if you have a data lake already, we can just enable it, right? If you really think about a data lake as just a storage of all your data, we can help kind of make sense of that very quickly. Again, not rip and replace, but more enablement of being able to use that data, put it into a form, or get understanding of your data and allow you to kind of really have an open access to it, right? In those use cases, that could be days to weeks, right? If it all depends on how easy it is to get all those data sources in. Like some of the customers we have like 5,000 data sources. So that's going to take a little bit of time, right? Smaller shops, it's much faster, right? So, what we try to advocate is identify a set of quick, easy use cases to get you going, demonstrate the end-to-end flow, getting you to value quickly, and allow you to start using that, and then start applying more, right? You don't want to kind of take on that kind of monolithic kind of effort. Just get value quickly. I think that's kind of, I am skirting around the actual answer because it really does vary.
Sure. It makes a lot of sense. And I love that idea of getting to value quickly, sort of helping the folks understand early on the kind of benefits that they can receive. I think with time we can squeeze in one more quick question. And I think this does refer to some of the things you talk about in the survey, just the global scale of the companies that you work with. And the question is, does the technology have the capability to work across global markets and multiple teams, or is it best suited on a case-by-case basis? And again, Joe or Michael, whoever wants to answer that one.
Yeah, I mean, I think one of the really beautiful things about this architectural approach is, as Mike said, it gives you the opportunity to start in a scoped way, where you're pulling in a relatively controlled number of sources, and you've got whether it's KPIs or whatever the use case is, and providing value quickly. But then you can add more sources and use cases and business drivers, to answer your question, connecting globally, right? And so one of the, you mentioned, is it, a case-by-case basis? Definitely not start there, get value quickly, but then grow it. And so now you've got this useful data layer. And, one of the, use cases that we see a lot is, an organization might feel like they have a good understanding of risk or risk utilization limits, controlled within a geo or a trade desk or a certain part of the organization, right? But being able to harmonize the data from more parts of the organization, ideally globally, right, is where a lot of the value is, or a lot of the risk is, right? And so I might have, a risk position in Germany and a risk position in New York that both look okay in isolation, but it's not until you start to pull in all of that data in an aggregated way where you say you might be breaching limits and doing things like that, right? So very much global and enterprise-wide in nature, but also very much what we see from a pragmatic implementation pattern is, start in a scoped manner, generate real quantitative business metrics in a relatively short amount of time, and then grow from there.
Excellent. Michael?
Add quickly to that. I think there's tiering there, right? So if you think about global organizations, they're going to have different requirements at different levels. And so just keeping it simple, like each region might have their own need, and you want to make sure that's service. And you need to make sure you meet regional requirements or regulations. And so you keep that going. You can service that, but then be able to start tiering it and then bringing the data together from each piece, right? So think of a pyramid where you can bring all the data together, and you can again still service that macro need, right? So at the top of the organization, they also want to have information, right? So you want to make sure that you tier that and provide and service the requirements that are there across your organization, right? As Joe mentioned, at a certain point in time, like let's just say the financial crisis of, again, 2008. Imagine you could actually apply a macro hedge at the top, knowing that something's going to happen, right? If each of the individual regions did it, you might be offsetting, right? So again, I'm just using that as a simple example, but if you think about the ability that you now get once you get all your data sorted across your regions and across your entire company, I think that's where you get the true advantage of being data driven.
Absolutely, absolutely. I'm afraid we've run about out of all time for today, but I did want to give you just maybe one opportunity if there was any sort of summation that you wanted to make. Again, we've covered so much material in a relatively short period of time. If there was anything by way of summary or sort of a point to underscore that you wanted to sort of leave our audience with, maybe we could do that right before we say our final goodbyes. Either Joe or Michael, if there's something you wanted to just share.
Yeah, I mean, I would just say, it's an exciting time right now. These new architectural patterns, specifically around an enterprise data fabric, what we call a smart data fabric. It's addressing a lot of these limitations of different approaches. And, I've been in this space for more than 20 years. And so, look, there's a lot of information out on an enterprise data fabric. There's new technology platforms that can speed and simplify organizations getting there and getting to value. And, it doesn't have to hurt, right? I mean, it doesn't require rip and replace and, doing a root canal on your existing infrastructure. It's additive and incremental in nature. And so, it's a really exciting time, to be in this space. And so that's the parting thought that I would leave everybody with.
And I guess what I would add is that, look, I think that data is critical to how we operate going forward. And you want to make sure that you are continually investing in how you keep yourself updated and be able to adapt to the future. You want to make sure you're investing, but also likewise, depending on, recognize where you are in your company, right? So if you do need help, there are partners out there that can help you kind of move forward, right? Some of the larger organizations, they have everything in-house, but then there's also the medium and small size companies that, they also need to modernize and transform themselves. Like there are resources out there, there's technology out there that can help you kind of move forward a lot quicker than if you wanted to just do it on your own.
Absolutely, absolutely. Well, I want to thank you both, Joe and Michael, for your insights today. Very, very fascinating conversation on a really interesting topic. I also want to thank our audience for joining us and being a part of the conversation. For more information on how you can leverage data to foster innovation in your own organization, we encourage you to visit intersystems.com/financial, where you can find out a great deal of information about the topics we've covered, as well as the work that InterSystems is doing to help companies make a lot of these innovations possible. Joe and Michael, thank you again for joining us, and we look forward to talking with you again soon.
It's been a pleasure.